Hey guys, hope everything's going well. You guys know that drill. Smash that like button, subscribe if you haven't, comment down below. Follow me on Instagram at AIH_sports. Follow me on my finance channel at AIH Finance. So I'm going to explain the mini crash that we had in two simple charts. And I showed this chart before, or these charts. Like I said before, Pancake Analytics told me that he's on Instagram and he's pretty big in the comic world industry with his analytics and his data crunching, number crunching. And he told me to keep on doing these videos, right? Even though it may be repetitive, that's what he's trying to allude at. And I'm going to be doing that because I think it's important. In my opinion, it's not talked about. So I'm going to be talking about first, I could just look at Bitcoin compared to like even sports cards, right? It sounds crazy. You can see that Bitcoin has been, smashed, as a sizable correction, even for the last few months, you could say since November of last year. And what I noticed, I got this information first from Jeffrey Snyder. I never looked at Bitcoin in terms of Treasury inflation protected securities. But if you look at it, right, you had negative interest rates, right? This was close to November, negative 1.91, right? And look at where we are today. We're close to positive interest rates. Now, I don't know what it is as of 5/20, which is Friday, but it's negative 13 basis points as of 5/19. Interesting. And during that time, the dollar index has been going higher. The 10-year yield, 5-year yield have been going higher as well. And like I've showed you before, November of last year, negative 1 basis point, negative 100 basis points for the 10-year yield, and then it's positive 20 basis points. You're like, what the hell does this have to do with sports cars? For those that haven't watched my videos before, long story short, sophisticated investors, they want to invest in inflation hedges from a long period of time when inflation expectations minus the inflation expectations versus the interest rate is negative, right? They don't want to be investing aggressively when it's positive. And you see prices go down. And you've seen sports cars go down, you've seen Bitcoin go down. Gold has held itself well. Granted, it didn't go up as high as Bitcoin did, and silver, which are hedges against inflation. And once again, this is not investment advice. This is more of me talking. So what I see happening is, okay, you see the 5-year tips, 10-year tips, close to positive for the 10-year, and you see it slightly negative here. What I expect, and I've talked about this before, I expect to have a dead cat bounce in equities, in gold, silver, Bitcoin, and I expect these yields to go negative, right? The way that I want to buy it is when I look at this, it's not how high or low particular interest rates are. I want to look at the tips yield, and I want to look at inflation expectations. A lot of people don't look at this, but 2018, that's the time, in my opinion, to be loading the truck. I was starting to get back in. I didn't even look at the tips yield, right? When it's very, very positive, I take the other side of the trade. Now we're over here where there's so much bearish sentiment where I want to slowly buy from a longer term perspective, but I'm not expecting the same returns that we saw in 2020 and to 2021. All right. And I'm buying for long term, and I told you my strategy in many videos. So I expect this dead cat bounce in cards, particularly those that are higher in demand, not like the ones that are in golden. Golden, some of these cards still hit record highs. Those cards didn't hit the market, or comic books, whatever. But I want to buy from a longer term perspective because I think interest rates are going to go negative short term, next 1 to 2 years. But ultimately, I do expect a major crash like we saw in 2020, maybe much worse. And I want to, be very aggressive if I have the financial means necessary, where you had positive interest rates. the 5-year yield. And if you look at over here, I want to be aggressive. And, we're positive again, right? Like I said, I want to buy goats because people will still go to goats and non-rookies. I want to buy the rookie cars I was telling Luca Nation podcast when there's all blood on the street, like 2020, 2018 markets were going down. So I want to give my own 2 cents. This is how, I view the epic mini crash, a lot of bearish sentiment. And yeah, some people may say, hey, look, stocks are not the same thing as cars because there's a 15% fee or whatever. If you're a seller on eBay, it's maybe 10% or 12%, whatever it is, 12, 15, there's time to sell it. You got to go to the post office, USPS, FedEx, whatever. You have to send email to your consignor. I get that, right? I've talked about the pros and cons of collectibles and also stocks. But I see opportunities short term and even long term, but I'm not going to be as bullish I was in early 2020 when I was not on YouTube. I was on YouTube late 2020. But anyways, guys, let me know what you think about all this. I know it's a different type of video, but I think it was necessary. All right, guys, thanks for watching. I'll talk to you later, guys. Bye.